All right. Hello and welcome everyone to the Big Bang Workshop on Market Business and Technology Validation with Joe DiNunzio. I'll turn it over to you, Joe.
Great, and I hope everybody is having a lovely week. It being Thursday, almost to the end, ish. So we're gonna talk about validation in a moment. I'm gonna share my screen. Just know that what I'm going to cover in these workshops really is to get you thinking and grappling with some of the issues we think are important as you start building up your plans to compete in the Big Bang or anything associated with your venture. I'm going to essentially take an entire day of the Entrepreneurship Academy and condense it to about 30 minutes. So we're going to cover a lot of ground, and I am going to make sure I pause after the end of each section for any questions. And then at the very end, we'll make sure to leave time for Q&A. Again, typically in these workshops, the questions are often the most valuable part of the session. And if you have the question, the odds are pretty good that one of your colleagues will as well. And then know that we post these workshop videos on the website, and we get quite a few folks that look at it after the fact asynchronously. So your questions will help them as well. All right. And just by way of the introduction, I'm pretty sure I know everybody on the Zoom, but just in case, as Nikki mentioned, I'm Joe DiNunzio. I'm the executive director of the Mike and Renee Child Institute for Innovation and Entrepreneurship, as well as a faculty member at the Graduate School of Management. Okay, so now I'm going to share my screen and I'm going to walk you through a presentation. And we will also be making use of Zoom polls for the first time. We've had some interesting challenges with poll everywhere, so we're going to Zoom polls. We'll see if we have similar or different challenges with Zoom polls, right, Nikki? All right. So our focus today is on validation, market, business, and technology. Okay. And so before we start, one of the first things I want to do is make sure that we thank our sponsors. So sponsors for the Institute this year, and particularly around the Big Bang, you can see them there. We're grateful. It is because of the sponsorship we're able to provide funding, grants for the first prize and six pillar winners, as well as fund a fun kickoff and fun awards ceremony. So thank you so much to our sponsors. And then next, this is a scannable QR code, so you can take your mobile device if you like, but upcoming workshops. Next week, we're going to have a narrative-driven workshop on your pitch. Really, really helpful to think about how you tell your story, right? Story about you as an entrepreneur, story about your company, your journey, your vision. So strongly urge you to join us next Thursday for the pitch, telling your story. And then I will be back the following Thursday to talk about your business model and defining a sustainable enterprise. So we're going to touch on it lightly today, but we'll go into more detail on how to build a model. And then finally, delivering your pitch by a pro. We push that out a little bit. The initial deliverables associated with the Big Bang don't require you to have your full pitch. So as we get a little closer to that pitch, I'll walk you through in detail what we think is important to have a successful pitch. And then finally, last couple of things on competition deadlines. So I know many of you are going to participate in the Big Bang. The competition entry deadline is March 3rd at 1 p.m. Pacific. We urge folks, get your stuff in earlier. It's always good to get there early. We have had years gone past, folks at the very end, something goes wrong, they wait to the last minute. Don't be that person. You've got plenty of time. Get your application in early. And then finally, the Little Bang competition deadline is coming up in a week and a half. However, we are now on a wait list for the Little Bang. Our current entry level is full. If you are interested in the Little Bang, please do apply to be on our wait list. Teams do drop out, but there is no wait list on the Big Bang. We don't limit entries for that. And Nikki, I think you may have one or two other things you want to announce before we jump in.
I do. I have one thing I also want to mention. Many of you may be looking for team members to build a team out to compete in the Big Bang. So we have a form online that you can access through the link here. And that way, oh, link isn't, and pardon me. And that way you can sign up, put your name and email, the kind of team members you're interested in connecting with. And then once a week, I send that list out to everyone who signs up, and you all connect with each other on your own that way.
Great. All right, Nick, thanks. All right, so we're going to dive into our presentation. And as we go along, I will pause periodically, but if you've got a question in the moment, just drop it into chat, and I will rely on Nikki to let me know when there are questions in the chat. So first off is to be able to define and articulate your vision, the vision for what you're trying to create, right? What you're trying to build in terms of its market focus, its business attributes, and its technology approach. Right? And then second is to validate your vision, right? By working through the biggest uncertainties. Is it desirable? Is it viable? And is it feasible? So as we think about it, I know several of you have seen our Venn diagram before. Really, we're thinking about this intersection, right? Of market, is it desirable? As the spouse of a vet used the phrase, will the dogs eat the dog food, right? Business, is it viable? Is there a way to create an economically sustainable enterprise? And whether you're building a margin-driven or mission-driven organization, it has to be economically sustainable for you to be able to have the impact you want. And then finally, technology, is it feasible? Can you actually make it do the work? And often we have folks say, well, I don't really have a lot of technology in my idea. We'll talk about that when we get to the section, but think of technology as the method by which you deliver your product or service or experience, right? So we're going to start with market. And so we're going to go to a Zoom poll, drum roll, please, to see if this actually works. It did during practice. So here we go. What is a critical question you have about your market? What is a critical question you have about your market? And when we think about market, we think really about your customer, right? So if you said, there's a question I would really like answered about my customer, just one, what is that question? I'll give you a moment. Right, 30 seconds. I really should hum the Jeopardy music, but then I think we have to pay a royalty, Nikki. Okay, 10 seconds. Get your last things in. Looks like it's working, so that's good. All right. Click send. 5, 4, 3, 2, 1. All right, we're going to end the poll and share the results. And let's see. I am not seeing results, Nikki.
Interesting.
Huh. Interesting and not in a good way.
We were getting only the answers we answered for each individual.
Interesting. In our dry run, it worked fine. Let's try one more time. So, view details. So, all right. Well, okay. So we still have work to do. We are in a growth mindset. We're going to stop sharing that. And see, one last try on this. View results from browser. Let's see. Yeah. So it wants me to sign into your account, Nikki, on Zoom because it's not in my account. Interesting. All right.
Would you like? Okay.
Yeah, it's okay. It's not a problem. We're gonna move on from this, but a good experiment. I want to make sure we get to all the things we need to get to. So we're gonna move forward. Okay. So as we think about market, one of the you'll see the same framework used for all three of these areas: market, business, and technology. We start with a hypothesis and key questions, right? So your hypothesis at its simplest form is that your customer, whether it's a business or an individual or an ecosystem, is going to value, adopt, and buy your offering. So we call that desirable, right? So your challenge, first for yourself and then for others, people that are working with you, strategic partners, investors, and ultimately your customers, of course, is to validate that first for yourself and then for others. And they're key set of questions, right? You're asking, who is your customer, right? How do you define them? How many of them are there? How much will they pay? How many will they buy? How often? And how will you reach them, right? These are very fundamental questions, but often we see in early stage ideas, folks are not grappling with these fundamental questions. And as you go through this process of the Big Bang, you should be able to begin to address all of these. And remember, it's going to be a collaborative an iterative process, but you should be able to get smarter and smarter about who your customer is, where they are, how you reach them, how interested they are in your product. One of I think the most important things for us to emphasize in this very short section, right, is marketing 101. And marketing 101 without any drama is it's the customer stupid, right? And this is built off of a Bill Clinton 1992 campaign where they kept getting confused with their presidential campaign about what message they should be focused on. And eventually, one of their leading advisors said, it's the economy, stupid, right? At the end of the day, people vote based on how the economy is going. Well, in this case, your single most important in thinking about how you move your idea forward, right, is focusing on understanding who your market is and who your customer is and what's important to them. Because absent that, the best business plan in the world, the best technology, all of that falls apart, right? So as you think about sort of key definition and questions around how you reach your market, and again, remember, we're covering in this presentation a full day in 30 minutes. So this is necessarily high level. Who is your customer? And particularly, how do you differentiate them from others who may not be, right? What are the characteristics of the people that have the problem you're trying to solve? And then who's the customer, the person that drives the business decision, and who's the consumer? Those aren't often the same thing. And the classic example is if you're interested in human medicine, right? Your ultimate consumer may be the patient, the person who is impacted by your methodology, your drug, your technology, right? But the customer may be the physician, it might be the medical plan, it might be the insurance company, right? It might be a lot of different things. So understanding who your customer is, the person who decides and drives the purchase decision versus your consumer. Sometimes they're not the same. And then who are other constituencies that are impacted as you think about your customer, right? And then what is the problem? And we talked a little bit about this in the last workshop, but the more specific you are here, the better. What are the specific challenges that your customer faces? And what elements of that have not been solved adequately, right? And then, the classic example of what's a nice to have, I've got a hangnail, versus a need to have, I'm bleeding from the neck. And then what's their willingness to pay? And often those two last ones are quite related. I pay so much for you to fix my hangnail. I'll probably pay a lot more for you to fix me bleeding from the neck. And then the last part of this is how do we reach them? And we can only touch on this lightly, but we often see in Big Bang plans not enough thinking about how we're going to reach them. We often see this sort of build it and they will come, right? I'm going to create this great thing and people are just going to organically find it, right? Not a good strategy, right? Think about what's your specific way to learn for customers to learn about your offering, for you to actually deliver your service to them. And who are the strategic partners that you need to be able to build awareness and distribution? And of course, this varies greatly depending on what your vision is, what product or service you're creating. But being able to have an early understanding of where are they going to find out about what you're doing, how are they going to be able to actually access and buy it is really important. Don't underemphasize that as you think your customer journey. And then finally, as you know, as part of the Big Bang, we require customer interviews. And even if we didn't, I would strongly urge you to do them early and often. And remember our $550 and $500 methodology, right? The $5 example of a customer interview is find somebody who is in your sort of target and go buy them a coffee, right? A Coho. right? But classically, as you think about customer interviews, you want to know, what do they think about the market, about the product, about how you're actually trying to sell it to them? And what do they value? And why do they value that? And will they buy, and why or why not? And is there someone out there who's potentially a stronger competitor that you have to think about how you position yourself? So the really important message here is absolutely positively, early and often, think about your customer and their journey and what's important to them and how they're going to find you and how they're going to engage with you and what's important to them. That is at the core not only of the Big Bang competition, but about how you think about building your idea and your model. Okay, so before we move on to the second part of our discussion, focusing on business, Nikki, any questions in the chat or any questions anybody has? And again, we'll have time for Q&A at the end, but if there's something that's specific around market validation, glad to address that right now.
There is one in the chat from Juliana.
Uh-huh.
In the case of a business service idea that has different customers and users, who should I focus on for interviews?
Oh boy, that's a great question, right? And I think that, and thank you for asking it. So often we have a sort of challenge around segmentation, right? And trying to understand who might be our first customer or our most important customer. I think that, the short answer is to create a hypothesis of who you think your most valuable or first customer might be, and start with them, right? But be willing and open to saying that may or may not be right, right? And so you may remember our think do loop, right? Where think about what's the uncertainty, right? Think about who your customer is, make a hypothesis, then go out and test it. So if there are myriad potential customer categories, and it's not clear to you which is likely to be the most important, strongly urge you to go broad initially, right, as opposed to deep. So have several conversations with several different kinds of customers. And based on those, you may then determine, I think I need to learn more about this type of customer based on my initial conversation, and start to go a little bit deeper. But if there's a fairly high degree of uncertainty in how you characterize them, I'd urge you to think about, how do I take my first 5, 10, 15 customer interviews and spread them across different kinds of potential customers before I go deep and do multiple for a single category. But unfortunately, there's no secret formula there. And that is a very common challenge. And so you're right to be thinking about that.
Okay, Joe, we have a couple more if we have time for
Yeah.
that.
Oh, yeah, we're good.
Yeah. Okay, great. So the next one is, would it be true to say that product development should focus more on the consumer and marketing should be focused on the customer?
Oh, that's an interesting question. Um, I, I don't know that I would agree with that, but I also don't know that I disagree with it. So let me give you two quick examples. So those of you that know the consumer products goods space, right? Packaged goods, toothpaste, detergent, all those kinds of things, right? That you might buy at Walmart or Target, or God forbid, somewhere else, right? Um, so as you think about it, so let's be Procter and Gamble for a moment, right? And you make Tide, right? Who's the consumer for Tide, right? At the end of the day, it's those of us that wash our clothes, right? We're the ones that ultimately use it. But who's Procter and Gamble's customer? They generally don't sell directly to the consumer, right? They sell to Walmart and Target and Nugget and many other places, right? And they're the customer, right? Um, but as I'm sure you probably know, if you watch any television or online or anywhere you go, right, you see a lot of P&G ads, whether it's for Charmin or Pampers or Tide or anything like that. They spend a lot of effort engaging with their ultimate consumer. What you probably don't see, but those of you that might be in the trades, right, in the retail business, they spend an, I'm gonna say equal amount, but almost equal amount focused on Walmart and Target and Nugget and all the others to convince them that they should put their product on their shelf and in a good place on their shelf and promote it and do all the things. Because if it's not available, right, and of course Amazon and all the online retailers as well. I don't want to just focus on brick and mortar retailers, right? So both are important. I would say that your question specifically around product development, if the product doesn't work for the consumer, then the customer in this case that I'm giving you isn't going to stock it, right? It's got to pull through the system. So I don't think it's an unfair statement, but they need to be convinced, the retailer, the customer, if you will, that it is a viable product as well. From a marketing standpoint, I would say it is both as important, right? The customer, Amazon, Walmart, Target, needs to be convinced that P&G is actually creating pull through marketing with consumers, right? But at the end of the day, if you don't have that, they're not going to buy, the consumer isn't going to buy the product. So it's a good question. And unfortunately, I have not given you a crystal clear answer. Go ahead, Nikki.
There's one more which you may have mostly just answered, but I still want to acknowledge it. So what
Yeah.
if the customer's boss is to pay, but the customer is actually the user? So it's kind of a consumer customer question again. If your boss is buying it for you and the employee is actually using it, how do you
Yeah.
deal with that?
Yeah, and I'll even expand it from boss to another department, right? So a common example of this is if you think about software as a service or IT services, right? So all of us use Outlook or Acrobat or whatever, right? But none of us make the decision if we work for the university or a big company of what software to buy and how to acquire and all those kinds of things, right? Ultimately, the IT departments, whether it's at central campus or individual departments, are making that decision, right? And so ultimately, you've got to be able to serve that end consumer. It's got to be a great product, but you got to convince IT, in my example, to buy it, right? And sometimes you can do that by getting to the consumer first and creating pull, creating demand that way. But often, the boss or, the decision maker here really has to be convinced. And you see it a lot in software as a service and any kind of software products. That's very common. Most often, particularly in enterprise software, it's not the ultimate person using the software that's making the decision, and sometimes there's several layers between them. So you got to do both, unfortunately.
Okay, thank you.
Okay, I'm going to move on and we're going to talk about business. Is it viable? And we work at the business school, so you can see this is pretty close, near and dear to our heart. We're going to go ahead and skip the Zoom poll. Nikki, we'll perfect this for the next one, I promise, and go right to the business hypothesis and key questions. So again, same framework as we use for market validation, but this case, we're focused on your hypothesis, which is your business, right, as you've currently defined it, is achievable. You can do it. Profitable, right? You actually will bring in more than you have to expend to deliver it, and scalable, right? So I want to talk about these last two for just a moment. So I'm profitable. I know so many of the student teams we work with, even faculty teams we work with, said, this isn't about, I'm not looking to make a lot of money, right? I've got this idea. I want to get in the marketplace because I'm mission driven. I want to have impact on an economic or social problem that I see that I know I can make better. First off, good on you. Absolutely. We strongly encourage that, right? And not all ideas are fundable in traditional sense of a financial mechanism, finance, right? But if you're going to build a sustainable company, right, even if it is mission driven, even if it's a nonprofit, right, you need to bring in more resources, however those resources are coming to you, than you expend to deliver the service. So I want to really emphasize this point. Those of you driven by mission, I see a problem I want to solve, and that's why I'm doing this. You still need margin to be able to do that, because if you don't build a sustainable enterprise, you're not going to be able to deliver on your mission. And then lastly, on scalability, right? Not all businesses truly have to scale, right? Most of the things we see with teams pitching in the Big Bang, there is an interest in scaling, right? Building a bigger market and having, a relatively broad impact. And those of you who've gone through, our pitch prep, you recall that we talk about the value proposition being the value proposition to the individual entity that is impacted by your product, the consumer in this case, right? But also the value proposition of why is it an important problem to solve? And usually we think about important problems to solve as problems that affect a lot of people. So that's part of why we talk about scalable, but it's a relative thing, right? Folks focusing on, medical treatments, right? Who focus on orphan diseases that affect very few people. That is a worthy pursuit, may not be scalable, right? So we want to be careful with the word scalable, but traditionally we think about a value proposition is it's an important problem because it affects a lot of entities or people. And so scalability in your business model is important. So finally, that's really about viability, right? And your challenge, just like it is for market, you need to validate it first for yourself. You got to buy in, right, to commit. And then you got to then get buy-in from others to get them to commit. And again, whether it's a funder or a co-founder or even a customer. So some of the core questions, right? How will you make money? How much will you make? How much will it cost? Meaning, how much do you have to invest before you start generating revenue or grants or whatever it might be? And when will it happen, right? And the classic example of this is, an app, you could probably start pretty quickly, build it, put it out there, see if somebody will buy it. If you're working on a small molecule drug, right, it's probably 10 years before you actually can start generating revenue. That's what we mean by when will it happen. Right. So there's a lot on this slide, and I'm going to take a very light touch on this. We're going to go into more detail on this in 2 weeks when we talk about kind of building a business model. But the first fundamental question about how you make money is, what's your revenue model? Are you selling units? Is your model based on advertising? Are you franchising? Is it a utility like electricity on a per use basis? Is it a subscription like Netflix, right? Are there transaction fees, right? Or are there licensing fees where you're creating something, some intellectual property, then you license to another entity for either a set fee or a per entity fee, right? So your first question is asking this question. And again, many of you think, well, I'm really about mission. I don't really want to think about this right now. You need to think about this, right? Because ultimately you need to be able to have a clear articulation of how you're going to make money. And then how much will you make, right? Generally, it's pretty simple math, right? As you start to think about the model, whether it's the price per unit times units sold, and I'm not going to read through all this, you all can read it, right? Or, how much how long of service or how many transactions or similar entities around how you think about it. But beginning to have some assumptions around how much we'll make is driven by what your model is, and then how many people are participating, how many units are you selling, and then how much will it cost, right? So every product or service has some level of development cost, right? What it takes to actually build out the initial service or product. And then for things like unit sales, right, there's a cost per unit sold, right? And for utilities and subscriptions, usually are as well. And then for most other things, there's also cost of operations. Cost of operations for a manufacturing company that's building iPhones is very different from the cost of operations of an entity that is licensing a technology that you've already developed, where it may only be a few people, right? But there's always a cost of operations you want to thinking about. And again, early on, I'm sure you're asking yourself the question, how do I even know this, right? So part of this plan is to start thinking about creating some assumptions and then testing them. And a lot of times testing them means going to someone who maybe has a little more expertise than you do in the market or in finance to begin to trial some of your assumptions and get feedback. All right. And so as you think about it, we think about, again, using this 550 and 500. Sketch something on a napkin to begin with, right? Test your assumptions, learn, adjust, and repeat. I've worked with companies that have gone through 50, 75, 100 business models before they get the one that works, right? Don't assume you're going to get it right in the first pass or even the first dozen passes, right? And we'll talk about this more in detail in 2 weeks, but we like you to start with a 3x5 model, the simplest version, which is what are the 3 most important things that drive your revenue assumptions, right? And what are the 3 most important things that drive your expense, your cost assumptions? And how do they change over 5 years? And again, the exact numbers you put in are less important than the logic you start to build around what those drivers are and how they're likely to change. Because that then gives you insight and a clue to where should I start putting energy and effort into validating what assumptions and what capabilities, what people do I need to have in my network to help me think those through. Okay, so let me pause. We're right on time here. And before we move into technology validation, and again, glad to take Q&A at the end. So you think about business validation. Nikki, are there any questions in chat, or does anyone want to raise their virtual hand and ask a question about business validation?
There are no new questions in the chat, but
All right, we'll pause for a moment.
a second. Sure, absolutely.
Okay, well, seeing none. And again, we'll take Q&A at the very end. We're going to move on to our last validation module, which is technology. Is it feasible, right? And so as you think about it, same framework, right? What's your hypothesis? Well, your hypothesis is your technology, whatever it is, the method you use to deliver your product or service or experience, right, will work, can be scaled. And this one's important, right? Can be scaled to the level that it needs to be able to deliver your product or service, right? And is defensible. And we'll talk specifically about that in a moment, right? But at the end of the day, there are competitors out there, right? And so defensibility for your technology or methodology is important. So we think about this as it is feasible, right? So again, your challenge, first, prove it to yourself, right? Validate it for yourself, and then prove it to others, your partners, your customers, your funders, et cetera. And some of the key questions you see on the right? I know you're going, well, why would I ask what is the technology? I know what it is. And I know Nikki will back me up on this. I can't tell you how many pitches, how many conversations we've had with entrepreneurs and innovators who are smart and eager and aggressive and working on things for a while. And we ask, well, what is the technology? And they struggle to answer that, right? You should be able to very seamlessly, without giving away anything, we're not saying go under, get under the hood, but what is the technology? How are you delivering it, right? And will it work and when, right? Is it an idea? Is it something you got working in the lab? Is it out in the wild, right? Can it be scaled? Will it be cost effective, right? You may be able to deliver something with the technology, but if it is made of unobtainium and it's going to take infinite amount of time to actually build the scale, it's probably not viable. And then what barriers does it present for competitors? Okay. So like we did with market, there's a lot contained in this slide. I'm just going to touch it at a very high level. You're, taking an entire module in an academy and reducing it to one slide. First question, right? What is it and how will it work? You should be able to describe what it does and be able to define the underlying technology. I want to pause for a moment, right? Some of you working on things that have potential IP implications or patent implications. You want to be careful here. We're not talking about, going under the hood and explaining how the engine actually works, but the sort of fundamentals, right? The high level of how it solves the problem, right? And how it actually delivers on the function you're committing to. And then how do you test it cost effectively? And how does it compare to other technologies? And we occasionally get there's no other technology out there in the world that does this. And my response would be, yes, there is. It may not do it as well. It may do it very differently, but there's no problem out there in the world that isn't being solved in some way, maybe poorly, maybe with antiquated technology or methodology, but you should be able to compare yourself. And then will it scale, right? Are the things you're using, the materials, the components, the resources sufficiently available? How mature are those, right? So if you're, relying on something that is still in an emergent stage and hasn't worked outside the lab, that's very different from, working on something like a pen that's been around a while, right? And then to the extent you have some sort of manufacturing or service scaling, right? What's the methodology for you to be able to scale up? And then finally, is it defensible? Obviously, having some IP, whether they're patents or trade secrets, is very, very helpful. And it's particularly helpful as you move forward to any kind of fundraising. Funders like to know there's some defensibility in the approach that you're taking. And then being really clear about what the substitutable or competing technologies, because that does create a very clear compare and contrast. And then the distinguishing value, right? The uniqueness of your technology versus the competing solutions is really important. And again, it's not just important for funders and for you, but ultimately your customers and your strategic partners. And then finally, as we think about technology, I suspect many of you are familiar with NASA's technology readiness levels, right? This is, for some of you, very, very relevant and very familiar. And for others of you, maybe the first time you're seeing this. So grasp, I think, most importantly, the idea, right, that something early on, which we identify here as TRL number one, right, is the basic principles are observed. We have an idea, right? As you move down this list, right, you've been able to do a proof of concept. You've been able to validate it in a laboratory. You've been able to move it into the relevant use environment out in the wild, if you will, right? You have a functioning prototype all the way down to your actual system that you're deploying is out in the marketplace being used by customers or consumers of the technology, right? just logically, right? When you're a TRL1, there's a lot of risk. There's a high degree of uncertainty. Your goal, whether you're offering a service or a product, whether it's manufactured or it's software or maybe, is to move down the scale, right? To go from high risk to lower risk, right? Because the more you move down that, the more you're going to be able to build your certainty that you have something and the certainty of partners, customers, funders, etc. All right. So I will just end with, because we can take technology questions with all the questions. I'll just end with this idea again of what you're trying to validate with your idea really focuses on three things. Market, customer. Is it desirable to that customer, right? Remember my simple example of will the dogs eat the dog food? Business, is it viable? Are you able to, in launch, bring in more resources than it takes to deliver it? Is it profitable? Again, whether or not you're building a profit or a nonprofit, right? In technology, is it feasible? Can you do it? Can you actually deliver what you say you're going to deliver? And can you do it in the environment that's relevant to the customer and the consumer? And can you scale it to achieve what your vision is in terms of the impact that you're going to have on the market? And your venture decidedly sits in the nexus point of our handy dandy little Venn diagram of market, is it desirable? Business, is it viable? And technology, is it feasible? All right. So I'm going to stop sharing so I can see your lovely faces, or pictures of your faces. And now we'll sort of move on to the AMA portion of the workshop, which is any and all questions are great, right? And remember, if you're hesitating because you think it only applies to you, don't. There's a high degree of certainty. If you have the question, other entrepreneurs, other innovators have that question. And again, we're going to post this recording, and many other folks will have the opportunity to benefit from your questions. What
There
questions?
is
Oh, go ahead, Nick.
there is a new one in the chat.
All right.
So it's talking about scaling up a business. So to scale up the business, if the cost linearly goes up with the revenue, is it good or bad? Is it ideal to have a $0 margin cost
Hmm.
and perhaps use a SaaS business, for example?
Yeah, very good question. And unfortunately, my first answer is it depends, of course. But in general, and I would say this applies in almost any situation I can think of, scale should drive cost economies, right? So as you scale your business, even if it's a service-oriented business, you should get more efficient. I started my career in management consulting, right? It's humans, which is being replaced to a certain extent by AI now, right? And you think, well, more humans do more consulting projects, right? But you think about the infrastructure, the senior partners, the technology, everything, even that business, which is very labor intensive, the law business, right, should get more efficient with scale. Your cost per unit delivered, whether it's a service or a product, should get more efficient. That's not always the case, but definitely unit economics should get better. The different question, which I think you asked, but I'm going to answer even if you didn't, which is your unit economics don't necessarily always get better, though, in that situation. It depends on the competitive environment and the market, right? So I'll give you one simple example, which is you think of a market that has a lot of early adopters, and your particular product or solution is really important to them, and they're willing to pay a lot for it, right? Because they have this problem. They're bleeding from the neck, right? And they really have this problem, and it's worth a lot to them. As you expand the market, as you scale your business, you get to customers that are later on in the adoption curve. Entirely possible your solution is not as valuable to them, and that's going to put pressure on your margins, right? What you can charge them to expand the market. And so margin doesn't always move in the same way, but on the cost side of things, your cost per customer served for majority of businesses should go down. If you're manufacturing something, your manufactured cost per goods may only go down a little bit with scale. Services, but like software is the classic example of, you build it once. In theory, there should be a very high margin for each additional customer you add. So imperfect answer, I admit, but hopefully that was helpful.
All right, we've got another one in the chat from Chelsea. So should we be thinking about how to prove that our venture is validated for the big bang competition? What are the most important parts of validation for an early stage CPG?
All right, Nikki, you want to take a crack at that as having been the supreme commander of the Big Bang for quite some time, and
Yeah,
then
so
I will join.
that's great. And I'm actually going to answer your question and then also provide a link for you to some of the rubric that the judges will be considering for the Big Bang. So, in short, yes, you should be definitely considering the validation of your business in the three areas that Joe just went over in this workshop. So, the more viable and validated your venture is in these areas, the more it will prove to the judges that it's actually a viable idea that beyond the Big Bang, you could continue to invest in it and grow it and develop it. And I'll also put the link to the website because you'll be able to see the judging rubric and exactly how you'll be evaluated in those areas.
Great, Nikki. Thank you for that. That was fantastic. And so I'll add just a little flavor to that. And you asked specifically about CPG. So I think all three are important to remember. For many of you, you're still pretty early stage, right? And so it's not reasonable to assume a 5-year plan that that has every possible scenario of customer acquisition and cost profiles and subcontractor manufacturing and all that sort of stuff, right? But you should be able to answer the fundamental question of why the customer is going to want and desire a product and why it is a superior solution uh, to anything else that's in the market. You should be able to demonstrate at a high level that your business model, right, the economics of it are going to grow and your revenue that's going to come in is, going to justify the costs and structure you need to deliver it. Even if over a short period of time, you're going to have to invest more in building the business that you're going to get in. And many businesses require venture or some sort of capital upfront before they are able to generate enough revenue to be cash flow positive. And on the technology side, especially, I would say for CPG, being able to demonstrate that there's something about your approach that technologically is different, right? It's distinguishing from what's out there, whether it's a soap or a chip or whatever it might be, right? That creates a rationale for why it really will be able to deliver on the value proposition you're providing for your customer. CPG is both, I think fascinating because there's lots of great models out there and also really challenging, right? Because generally we think about scale for those businesses, it's big, right? And requires a lot of capital, but that's not always the case. If we're going to be teaching a case in the INE residential for the MBA students a couple of weeks on Once Upon a Farm, right? And Once Upon a Farm, John Forker, a UCD alum, along with Jen Garner and several others, started Once Upon a Farm, which started with healthy fruit and vegetable pouches initially for infants, right? And you think, what a competitive space to get into and how you're going to make that work. And it's fascinating and an awesome case study, and John's amazing. But they were able to build out a product, a distribution strategy, a brand strategy, to ultimately compete against huge companies in the CPG space that have been in that space for a very, very long time because of the unique approach they took to the product, the quality of the product, how they built their distribution relationships, how the technology worked to create all those things, right? They had to validate all of it to be successful.
Great. So we've got another question in the chat about the business model.
Mm.
How we define, um, how we define our product price or service fee. Could we estimate it from how much the customer will pay instead of the cost of the product?
Well, so very good question. These are great questions. I love this workshop. Again, this is going to be a simplistic answer to a very thoughtful and complex question. But often it's helpful to start with analogs, right? What are consumers, customers paying today for a similar service, right? It's not the be all and the end all. I've seen plenty of presentations where they say, hey, our competitor is charging $19.99. We're going to charge $18 and we're going to win, right? So I don't want to oversimplify it, but that's a good starting point to see what's the market currently for similar services. And again, completely don't buy there's nothing similar to what you're doing. There is. It may not be good enough. I mean, all those things, right? That's a really good place to start, right? And then, second is thinking about, can you define the value of a solution to that problem to the customer, right? That's really difficult. And there's sophisticated market analysis, everything from relatively simple conjoint to very, very sophisticated trade-off analyses that can be done early on. We tend not to do those, but you're trying to figure out, how would somebody trade this off versus another alternative, or how they think about spending on this versus something else. The extent to which you can create some analogs above and beyond specific products or services that are solving the same problem, that's really helpful. I think it's really dangerous to go the cost side, right? And we've seen presentations and pitches before. Someone say, well, it's going to cost me $20 to build out this service, this product. So I'm going to charge $25 and I'm good to go, right? The cost of the product does not typically equate to the value to the end customer. And we can all think of examples of things that are very inexpensive to make, but we've value very, very highly. And we can also think of things that are very expensive to make that have a very, very tiny margin, right? Hardware often being one of them, right? Your iPhone is a great example. Apple seems to be doing okay. And so strongly urge you not to create a tight correlation between the cost of the product and what you charge for it, other than back to the business validation. If it's going to cost you $25 to build a product and your analog assessment says the most I can get for it is 15, okay, that's a good hint, right? That you need to either rethink your value proposition to suggest you might be able to charge more, right? Or relook at what it's really going to cost to deliver it, and is there a more cost-effective way? Or, and we say sometimes, just say, this just isn't going to go, right? This isn't going to work. We talk in our academies often about sometimes ideas hit a cul-de-sac, and it's important to acknowledge that and say it and move on, right? Nobody wants to work on something for months and years and spend tons of effort. If they could find it early on, it's just not going to work, right? Pricing and the ultimate value is a challenge, right? But back to customer interviews, right? That's a good place to start to begin your collaborative iterative cycle of starting with assumption, being able to test it. And of course, the ultimate test of it is actually put it into the marketplace and see if the dogs who are eating the dog food actually pay for the dog food. And that's ultimately typically the only way to really prove things out.
Yes, thank you very much for your answer. And follow up is ideally my product is so unique. The competitors, they don't have our features. Like for example, I give you exactly what we did is what we are doing is the AI that can do the grading stuff and do all this work and locally just on your desk. So basically for other competitors work and they just call like ChatGPT and use their API, everything is still like send your private data and to OpenAI. But on our product, everything is locally online. So that's so unique. And we can also solve the problem and get solve all the pain points you have in your work and naturally fit in your workload. So this then it's very hard for me like to define this business model, the price, because the competitors, their price is always cheap, like $15 or $20 every month for per client or per user. But on our side, we have the cost on this machine because the machine will just run in your office. And so, so that's how I put the question there.
That's a great question. So, ultimately, it's very difficult to prove it until you're in the marketplace, but you can do a lot, right? Exactly what you just did, right? Describing what it does and why it's different. Say, how much would you be willing to pay for that? I know you're paying $20 now for what you're getting, but it doesn't have this. How much would you be willing to pay if I could deliver this in this way, right? And you start with the $5 test, which is, 5 expert customers who use the competitive product, right? And then you expand to a survey, and then potentially you do a conjoint or some sort of trade-off analysis. But start with that first $5 experiment and get comfortable that how you're even before proving that you can do what you say you're going to do, say, hey, just assume I've done it, right? And it's like, what would that be worth to you? You'll learn a lot from doing it. It's not enough, right? The $5 test is rarely enough, right? Having 5 people who use your product, who use the competitor product, say, absolutely, I'd spend $5,000 a month for that. You go, great, let's go, right? But it's a good start, right? And if all of them say, it's just not that worth it to me, right? And that begins you to think, okay, am I positioning it wrong, or am I offering something that's not that different, right? But it really is a collaborative, iterative, and it starts with customers. You can also look at industry experts, right? Mentors that know that space, and you can say, hey, there were 2 other companies that tried that, and it didn't work for them. So if you're going to try it, here's what you need to do differently, right? But especially early on, you need to have a lot of conversations and a lot of exploration, because you're not at a point where you can actually put it out in the market and test and see whether somebody would actually, pay for the difference. I would argue that it's always hard if you think about Clay Christensen, right, and the disruption, innovation and disruption. His thesis is that disruption generally comes from below, meaning incumbent companies are disrupted by technologies that may not be as good, but that are cheaper. So it's not that disruption can't come from a premium product. It's just not as typical, right? And so you think about incumbents in the technology business, they're almost always disrupted by smaller companies or more nimble companies that are doing what they do, maybe not even as well, but doing it a lot cheaper. So it's unusual to go the other way around. Absolutely not, prohibited or impossible. It's just different.
So could I understand the way it's like how much the customer they are willing to pay for their private and something like that?
Yeah, and so I can drop into chat. There's several articles about Clay's work. If you're not familiar with them, while we're talking, I will pull up one. And so worth taking a look at his theory. Hold on, give me a moment. Okay, I'm going to drop it into chat right now. And take a look at that, and that'll be a good start. Okay. All right. While I'm doing that, Nikki, do we have another question?
Let's see. I think those are all the questions that were in the chat. There was a couple just logistic questions about the Big Bang, and I was able to answer those in the chat itself. And so all of the links for those of you who are watching the recording all of the links that I'm posting in the chat here are available on the Big Bang website, as well as our Startup Tree site. And so the QR code that you saw earlier on in the presentation, and we'll show again here at the end, you can use that QR code to access all of our links and sites. And then, of course, always reach out to me if you have any questions or can't find something that you need.
Okay, so I've dropped that a link to one version. You can ChatGPT or Google more about Clay and his disruptive innovation.
Great.
Awesome. All right. Well, then we will wrap up because we're right on time, right, Nikki? Look at us.
Yes.
So thank you, everyone, for joining us. Really appreciate your participation. Strongly encourage you to join the Big Bang. There is no downside. There's only upside. If you've got an idea, you're working on it, and you really want to test it out, by going through the process, by getting feedback, by working with mentors, by talking to customers, you're going to learn more about, is there a viable path or not? And either answer is good. It's always better to be affirmed and confirmed than not. But knowing your time, energy, and effort, it's great to learn more and understand, is what I'm working on really viable, and is it feasible? And is there a path forward for me to engage with customers? And the Big Bang gives you a great opportunity to do that. And then you never know, you might win our first prize or one of the 6 sector prizes and get a little bit of capital to move your idea forward.
Great. And one announcement I just thought I could make here. It's a program that we're offering at the end of February. For those of you who Joe mentioned that we do an Entrepreneurship Academy, we're doing a half-day session on February 24th called UC Foundations. And here's the link to sign up for that. You can take a look at more information there. But if you want to see a little bit more of this information given on a more in-depth scale, we do a half-day session on February 24th.
Yep. And just one last thing I'll do. They're doing craziness is share this. So again, you can scan this link to register. We're pretty careful. We don't spam you, but this will give you the opportunity for all of our upcoming events and activities this year. And for those of you that'll be around for a while for upcoming years as well.
All right. Well, thank you all so much. It was good to see you. And we look forward to next time. Take care.
Cheers, everyone. Bye.